ado abathari yari nyami abasoni yari wala fana nyami
inyanta min kela drong wala ko log onto www.baluwo.com ye prepaid electricity sang min ka bonale electricity company solto min bale Gambia banko kanjang Senegal Mali Nigeria and Sierra Leone.
Calling ambulo luku with whatever we do. Johnny safu no la with whatever we do. Hale yi demu new school. Nyepamne ne kudlukula. Nyepangi ragala gena. Nyepamne ne kudlukula. Ibuloke noto ni beti sola. Ibuloke dato ni betoto.
Bigi Congo.
Lamin.
Na?
Lamin te jibe norin te nyame Lamin.
Kabona wulo kono.
Wulo kono nyinta mo Lamin.
Pabilenki.
Muna ngata afamole.
Haina.
Ngata. Ngoto le. Fabrama.
Mingi. Baba nyola.
No ngoto le Fabrama.
Na mu jumara kan kuma diten.
Fabrama.
Jumara mu.
Ndele bare muso.
Lunda mana. Jamani mbere.
Lindo ko.
Jamani.
Bari ngoto man kontande.
Bari jamani fana na ramudu wa kontan.
Ngoto minaka ngalamin je fon filitala. Lamin jibe nori nyala.
Lamin ila siran sama ne benki. Yala so tol sayni no ko ngol ko momo.
Ngoto.
Nam.
Itedinte yalo ne Lamin hakilo diata bake karambugot. Anu santeng ministry ko di ngole si suwo ko amanke ko do holi de
si bitun
bagona de
ala ni ko kede namo balo
ala ni na ko na karta bulo be dam ala ni je
ngodo
nam
ngoto mon kontan feren
jamani mu ne keda
ifika Lamin ki wulo ko no nyintay mon ko do fete malo Lamin nyande sila la be la moy kala karango
jamani karamol be soron ne ko fasita wulo ko nako
karambo wol ma soron ni ko karambo wol soron da amanke ko holiday lem ngodo dindi ngo nyanta sila la ala karango la moy yamen kamen fue man kontaan anda mande
alla nyin kombo courant adanda la kombo len do la jankara mol soron do kamen courant ma ra do la kombo e ko ndol fana na kara mol soron je kara mol soron Lamin ada lo nyino la man tara fe na sokon ala mu nekela
Lamin ite fayda malon ko lesinol be ke kar radio to
nga fine
e ko nyani mo Lamin
nga fine
ya mu na fonye
bi kabin mina kan ntambita nteri maning Fatu ndambite la sukol ala dinngol bebe siri be la moy ka
Fatou dan so am fana tambira jele ni subala la ngaje dindi ngol be jet talanta nen kili waro e be seri jelet
sa Lamin farante ku kili wo ke no la ba Lamin bita ka wulo ko no nyin taymo Lamin
amandara fenela
ite dine ko di man si yakaru la sino la moy radio to e balon na
mu ne ka ke afende ba nyaara ni alon
kelentel jikot
afende ba mu ne be ke
ite balon tel be jikritel ni man karambe ku kele yaaje nata karana mbasa malaya ay tarije
par ñarande kombo courant ho findira kombo ide na rajede ni sonka bay ko Lamin manyata la wulo ko aru karam mo be so dafa ne membe
ko to wole nati bawo ngalle ni Lamin kuntala kombo courant o ka fa me kombo courant asototal wala kinay ko e sisu wo kono bari ni ko e sisu wo kono be karangol dike la radio ni telel to hani tele masoto to nyaay man tele soto la bongo bar radio be bulen koto batiri sanga ay si ay alamo
sa do kala nyaadi
ko ta o bulaji
ado kala nyaadi
kamun ke nyaadi
radio abe wala moy la be mona falaje
ibe la karandirol kala jele
ti talle be radio ko men ka karande
ile subject ro baby jele baby jele
wala nanga coco moy fa dan so wolya ngombe tambi kana ngadi ni wolde be ikadum bungo de ko kada
ma asototal de
Lamin mala be karawala de
bari
laftalal ideal on ko inde every year second wala fourth
ko nde ko folle sini lamba ndele sini lo ne ba
mbasa mba foke en koto wole fango yen wulindi yalo famo keta bat yin fana bulata kol ko me yen nati jambi Lamin nyanta karana ntel be jiko be nyineka ya bulay kara wulo kana ta kilar ya bambalo yo be bulaje koto dindi ngoy si ayala le sino la moy radio
wala ka munda karam mo man soro Lamin nyana kara si so na
radio la sila le ayala le sino
dal ko korno ko smolo
kilar ya
mo be ngala ko momo sa mi do ni ko no kera
mengi bruzo
ndelo ko ro la ba ro sa no radio ba no bari woro radio ni abe jele ba do ngamra do man dembe buljan dala nyara nyar wo ko fendi mo la Lamin tayra ba ro sa
bara te ku folo ajibe nori nya Lamin tamete ku
nari.
Teku.
Bari ko do famo ke.
Imagine nani nyambol. Sizol le keje kisiki man sizol. No le kabun ka nyoma bari nyambu kilo ni manya na kafindi. Ni nambe korosor laga. Ni nambe korosor laga.
Ngale limbeta de be nyambo do dilanna.
Nyara ni ko rin fennat. Nyara nata.
Bari famo ke da.
Ngata bungono, tambi bungono. Nyara ngando ko fele. Ko ke baru nganda ni pelo landi jak.
Iyo awa be tar la
bungono bismillah. Bisu diara.
Pendulala. Ye fungo tanka sina dulu tanka. Koro korota. Korota.
Hello viewers and listeners. The last lessons we were talking about the type of balance we have, what are balancing of accounts and the types of balance. We said there are two types of balance. We have the debit balance and the credit balance. So what we said, the debit balance is the excess of debit over the credit, or we said when the debit side is more than the credit side. For instance, we have a question, we have a scenario like this. We have sales. So sales is always credited, or for instance, let me not use sales, let me use cash. We have cash account. So we have an amount on the credit side, debit side 200, and we also pay for rent. And here we receive by sales. So what happened is, and here we have what we call 150. So you see we have one entry on the debit and one entry on the credit. So now these are just what we call entries. We entered on the debit and we entered on the credit. But there is something that we need to do. At the end of the entries in the accounts, what we do, we need to balance off, and that's what we need to discuss, balancing off. So I want to just to tell you what is the difference between a debit balance and a credit balance. So a debit balance is when the debit side is more than the credit side. So if I am to balance this, for instance, I do it like this, I close the account. And according to the law, that we look at the amount that is greater. The greater amount is what comes to the column. And here, if you look at 200 is more than 150. So we say 200, and the next one we have another 200 here. So it doesn't balance. There is a difference. So the difference between the debit and the credit, I told you, is the same as what we call, is the same as balance carried down. So that is the balance at the end, we call it balance carried down. And what is the difference? 200 minus 150 is equals to 50. So the difference between the debit and the credit represents the balance carried down. And now, the balance carried down is found on the credit side. Why? Because the debit side is more than the credit side. And for every carried down, there must be corresponding brought down. The same amount that is carried down should be the same amount that represents the brought down. So we have 50. So now, in this case, we have a different. We have a balance. What is the name of the balance? Because of here, the debit side is more than the credit side. That's why we have the carried down on the credit side and the brought down on the debit side. So in this case, accounting, if you are asked, what type of balance is this account which is called cash? You call it a debit balance. Why? Because the debit side is more than the credit side. So for instance, when we have another account, which is called the bank account. The bank account. So we have a bank account. So in the bank account, we can also have two entries. No, let me take another account instead of bank. Yeah, we can take bank. Bank is okay. We have bank account. The bank account, the credit side, we have, we receive at the beginning capital. We started with 1,500 and we paid for insurance. Insurance 2,000. Now, we have one entry on the debit side and we have another entry on the credit side. So now we are asked to balance this off and see whether we made a debit entry or we have a debit balance or we have a credit balance. So how are we going to do this? We're going to draw our columns. Then we are going to balance this off and see whether the debit side is more than the credit side or the credit side is more than the debit side. So we have 2,000 and then we have 2,000 because the 2,000 is more than the 1,500. So the difference will be, where do we expect to have the difference? It's found on the credit side. So the difference will be 2,000 minus 1,500. The difference will serve as 500. So what do we name this? We name it balance carry down. And for every carry down, there must be corresponding brought down. We call it balance brought down. So this balance brought down will be the same amount. For every carry down of 500, there must be a corresponding brought down of 500. So here, let's look at this difference. This one, the brought down is on the debit side because the debit side is more than the credit side. This one, the brought down is on the credit side because the credit side is more than. So how do we call it? This is called a debit balance. And this one is called a credit balance. So that is what we mean by a credit balance and a debit balance. Now let's move on to the concept to be noted whenever we open our various accounts. So the first one we said all assets accounts normally have a debit balance. All assets account, whether it is current asset or fixed asset, they always have a debit balance. Meaning the debit side must be more than the credit side. So unless whenever, for example, this bank, it cannot be even considered asset. If the bank you add and you realize that now the credit side is more than the debit side, this bank is not considered as an asset, it is an overdraft, meaning what we actually paid is more than what we received. So it is going to turn from bank account to be an overdraft account because the credit side is more than the debit side. An overdraft is classified as a liability, not as an asset. So therefore, if the bank has a debit balance, meaning the debit is more than, it becomes an asset. But the moment the credit side is more than the debit side, it is not considered as an asset, it is considered as a liability because it will have a credit balance. So the next one is all expenses account normally have a debit balance. That's true. If I open rent account, I open insurance account, I open discount allowed account. So all these accounts, because of they are expenses, they must have what we call a debit balance. So the other one is, if you know for that of expense and assets, the rest are going to be considered as items with credit balance. Now let's see. We have capital account. Capital accounts normally have a credit balance. Liability accounts normally have a credit balance. We have revenue or income accounts have a credit balance. Now, those are the items that we should also consider as credit balance. So now, self-balancing occurs when the total debit and the credit sides are equal. The total on the debit and the credit are equal. For instance, I have what we call Buba. Buba's account. Buba was a customer, maybe probably. Buba received a credit sales. Credit sales probably of, Buba received what we call 200. And probably a credit sales of 200. And at the end of the period, Buba was able to pay this credit sale using what we call cash. Buba paid what we call 200. So Buba was owing 200 and Buba paid 200. Obviously, in this case, when I open this, what happened? The debit side is 200, the credit side is 200. So therefore, this is what we call self-balancing. Why? Because the total debit is equal to the total credit. And whenever this occur, meaning the debit side is equal to the credit, there will be nothing like balance carry down and balance brought down. So carry down and brought down only exists when there is a difference. The total debit is not equals to the total credit. That's why items like this, they don't reflect in the trial balance, because what we transfer to the trial balance has to be the balance we have in the account. So if there is a self-balancing, 1, there will be nothing like debit balance, there will be nothing like credit balance. 2, it will not be taken to the trial balance. Simple and straightforward. So that is the meaning of the self-balancing. Now, let's move on to the next one. So the first example we'll be having is the accounting equation. I will solve it too. Now, accounting equation is very simple. Normally, questions are set on the accounting equation, not as practical, but they are set on the objective. Objective, so that students will be able to get it easily there, because it will be too cheap to set just like this in exams, as practical exams for grade 12 students. So now, we have an example. Example 1. We have assets, we have liabilities, we have capital. Let me just give you the summarized formula. Assets equals to capital, that's the owner's claim, plus liabilities. If you are finding your assets, you need to add your capital plus your liability. What is brought by the owner plus the outsider is equals to what we call the total assets. So now, the other one, if you are calculating capital, capital is equals to, when I find the subject of the formula, I transpose this. So it's going to be assets minus what is left? Liabilities. That's the second part. The last part is if you are asked to calculate what we call the liabilities. It's just the reverse. So if you look at it now, if you are asked to calculate the liabilities, very easy. How are you going to do it? You're going to say now, assets, I'm going to do the same transposition. I'm going to transpose this and find the subject of the formula. If I transpose now capital, then it's going to be capital minus, because the law says if you are transposing an item from non-equal to sign, if it is crossing an equal to sign, they say if the sign is positive, it changes to negative. So the capital is positive. When I'm transposing it, crossing the equal to sign, according to the principle of maths, it's going to change to negative. That's why I have the negative. That's why I have the negative here. That's why I have the negative here. It is not magic. It is transposing. So the liability has a positive. So if I'm transposing it, crossing the equal to sign, the law says it has to change to minus. So what am I reading from these three equations? 1, if I'm calculating assets, I always add. 2, if I'm calculating liabilities, you subtract. If you are capital also, you subtract. So now, let's look at the first example, A. We are asked to calculate what we call the liabilities. The liabilities. So the liability will be, write the formula first. There's financial obligations. So we have liabilities is what we are finding, because that's the one which is going to be assets minus what we call the capital. So liabilities, what is the assets? 5,000 minus, what is the capital? 500. So the answer will be 5,000 minus 500 is going to give us, the currency is dollars. We write the currency is 4,500. That's our answer for letter A. Let's go to answer for letter B. For letter B also we are asked to calculate. Okay, I will leave that one. Let me calculate letter C. Calculate letter C, which asks us to calculate assets. So you are going to do B as an assignment. But let me calculate letter C, in which we are asked to calculate the assets equals to capital plus liabilities. So now, asset is not given in the question, so we need to find the assets. So the capital is 4,800 plus what we have is 12,200. So if I want to find my answer, 12,000 plus 4,000, that is going to give me 16,000. 800 plus this, that's going to give us 1,000. We have 3 zeros. Then this is going to be 12, 16. We have 17,000. 17,000 is the correct answer. That is 12 plus 4 is 16. Then 16 plus 1,000, that is going to give us 17,000. So that is our answer. We move on to the next one. That is question 2, example on double entry recording. Record the double entry debit and credit entries of the transaction. So we are going to take this question to identify which one should be debited and which should be credited. Now, let's look at, they says we need to just identify which one should be debited and which one should be credited. So the first question we have, that's letter A. The question is saying, let's see which one is debit, B, which one should be credit. So now, this one is just teaching you the basics so that we will know which item to be debited and which one should be credited, not actually opening a ledger account to solve it. So now we have A, purchase of an office building for 1,000 by check. 1,000 by check. One, the law says if you buy fixed asset, there is nothing like purchases. So the account that exists there is, the two accounts that exist there is office building account, and the next one is bank, check. Anytime you said accounting, they say by check. Check is represented by an account called bank account. The abbreviation for account is A by C. So that's the abbreviation for account. So therefore, let's now, after identifying the accounts, let's identify which one is giving and which one is receiving. Office building is an asset, bank is an asset. But let's look at here which one is going and which one is coming. We are buying office building. Office building is coming to the business, so that's is coming in. But we are now bringing the office building by paying what we call check. So here, you look at the bank is giving. This is the giving account, and this one is the receiving account. So because of this is the giving account, so the law says we credit the giving account and debit the receiving account. So because of the building is the receiving account and the bank is the giving account, according to the principle, they said we are going to credit the giving account and debit the receiving account. So therefore, if I want to enter this thing to the debit and credit, I will look at the one that is debited, and that account will be the one that is receiving. So here the building is receiving, so we write office building account. And now, what is the next one? The next one is we have a bank account. So the bank is giving, is going. So we have the bank account. So the bank account will be the giving, and the giving will be credited, and then the other one will be the receiving. So now, let's move on to the next question. B, sold goods on credit to Halima. Halima, that's the, you have maybe the first one, you have the second one. So they said identify the giving and the receiving. But before we first of all identify which one should be debited and which one should be credited, we first have to identify the accounts that are involved. Then later we identify the giving and the receiving. Then finally we are going to debit the receiver and credit the giver. So now, according to the transaction, they said sold goods on credit to Halima. So the credit is talking about here, we have the two accounts that are involved there is sales, because accounting said whenever we say sold goods, whenever we see sold goods in a transaction, sales accounts exist. Then the other account is called Halima. So we have Halima's account, and then we have what we call the sales account. Now, which account is giving now and which one is receiving? Because they say to Halima, obviously Halima is receiving. So what do? We are going to, this is going to be the receiving account, and obviously this one is the giving account. So after identifying the giving and the receiving account, what we do is we apply the principle, the golden rule. We debit the receiver and we credit the giver. So what is the receiver here? We are going to debit the receiver. Alima is the receiver. So we debit Alima's account, and obviously sales account will be credited. Now let's move on to for the letter C. Letter C says bought goods. Letter C said bought goods on credit from Fanta. Bought goods from credit. Bought goods on credit from Fanta. So the two accounts involved there is purchases, because the law says whenever we have bought goods, purchases exist, and the other account will be Fanta. So what are the two accounts involved there? We have the purchases account and Fanta's account. So the next thing is identify which one is giving and which one is receiving. So they say from. Look at this English language. From. Whenever we have from, anything that comes after from is always the giver. And anything that comes after to is always the receiver. So here they say from Fanta. So obviously Fanta is the giving account. And if Fanta is the giving account, we don't need to disturb ourselves for the purchasing. It will be the receiving account. Then therefore, this is step 2. Then the last step is we identify which one is giving, then we credit that one, and identify which one is receiving, then we debit that one. So you will see that here we have debit and the other one we have credit. So let's go back to the previous demonstration. What do we have? They say purchases account is receiving. So purchases will be debited. We have purchases account. And then what is the other account? The other account will be Fanta. So Fanta's account will be credited because Fanta is given. So the last one, that's letter D. Receive loan from Aminata by cash. So here, there are two accounts involved. So sometimes some people will say it, okay, now, for instance, some will say it, okay, you can say loan account, and then you write Aminata. Loan account and write Aminata. Then the next one we can have cash account. Cash account. So we are receiving loan by from Aminata by cash. So here obviously cash is coming in. So cash will be the receiving account. And then loan, if cash is the receiving account, loan will be the giving account. The giving account. So now, after identifying which one is giving and which one is receiving, so the last step is we are going to debit the receiver and credit the giver. So we have a debit entry and we have credit. So which one is receiving? Cash is receiving. We are going to debit cash account. And then Aminata or loan account is given. We are going to credit it. So that's the example we have on this exercise. So now let's move on to question 3. Question 3, I would like you to try question 3 by identifying the account to be debited and account to be credited. So probably if you identify this account to be, because it's the same thing, all the transaction that is given is going to help you to know, because the moment you know how to identify the accounts, you can able to know maybe probably how you can able to identify which one is given and which one is receiving. So if you identify the one that is given and the one that is receiving, so the final entry will be we debit the receiving account and credit the giving account.